Hi there, Doug Oosterhart here, founder of LifePoint Planning, a fee-only financial planning firm that specializes in working with General Motors employees. Today I wanted to go over Roth in-plan conversions. It's a new option that GM's 401k is now offering that allows employees a lot more options in their 401ks in regards to savings. Let's check it out. All right, so the first thing that I wanted to do is simply outline the ways to contribute. The first way that you're able to contribute is pre-tax, meaning you get the tax deduction when you contribute, but when you take the money out, it's taxed at ordinary income rates. One thing we don't know is what tax rates are going to be in the future. So the thought here is that, oh, well, maybe I will live off of less in retirement, and so therefore my tax rate will be lower. Not sure. That's something that we'll uncover when we do a plan, but that's the first way. The second way is Roth. So after tax, meaning you don't get the deduction when you contribute, but generally speaking, when you take the money out, it will be tax-free. Again, we don't know what tax rates are going to be in retirement, and so this is something that we'll talk about, if we elect to have a call, that we can outline, oh, well, what are the best ways with which to contribute? The third option is after tax, which means you don't get the deduction when you contribute, but you can withdraw the contributions at any time. However, you do pay tax on gains. So for instance, if you contributed, 25,000 or 50,000 or 100,000 of contributions to the after tax bucket, and then that, let's say you contributed 100,000 and then it grew to 175, you would be responsible for the tax on the gain. And again, this is something that we break down and go through when you're developing a plan and deciding ways with which to save. All right, so the next thing that I wanted to take a quick look at was, what does GM even match? And so looking at their benefit book, which you're able to get just going on your net benefits site online, they will match your combined pre-tax, Roth, and after-tax contributions dollar for dollar. So 100% up to 4% of your eligible base pay. There are a couple different caveats based on length of service that are outlined in the benefit plan. And so for the sake of this video, I'm not going to go into each one of those. That's more of a one-on-one thing that we'll cover with each one of our clients based on, looking at their pay stubs and length of service, stuff like that. But I did put in, if the full breakdown is in your GM benefits guide, it's page 7 of the guide or 16 out of 193 in PDF format. If you do not have this, I'd be happy to walk through it with you and just run through. Because generally speaking, the percentage, mathematically works out to be a little bit more than 4%, but just going on the benefit booklet, 4% eligible base pay dollar for dollar of any type of contribution, regardless of what type it is, whether it's pre-tax, Roth, or after tax. All right, so the next thing that I wanted to cover was contribution limits for 401ks for 2019. So if you're under 50, you can contribute $19,000, and that's a combination of pre-tax and or Roth contributions. And then if you're 50 or older, you get a $6,000 catch-up, and you can actually contribute $25,000. Now, that's the first limit. The second limit, there's actually another limit for total combined contributions for pre-tax, Roth, after-tax, and employer contributions. And I'll run through a basic example of this, but for this little section, I wanted to just break down the limits. So that being said, that limit, if you're under 50, is $56,000 total of all dollars. And then if you're 50 and above, it's actually $62,000, again, including the catch-up. So under 50, 19,000 deferred, or a total of all dollars, including employer, of 56, and then 50 and above, the catch-ups that add the additional 6,000. I will run through a basic example of this and the Roth in-plan conversion next. Okay, so here is a basic example of the Roth in-plan conversion and why it's so key and important to at least understand. I put here a single employee age 55 making 150,000 in base income contributes the maximum possible to their 401k, so $25,000 a year, and they just decided to do it pre-tax. I then said, okay, GM matches 4% of base, so 6,000 for a total combined contribution of 31. Now, since we know that the total combined limit of all dollars is 62,000, what this employee can actually do is go right into their net benefits and add an additional after-tax contribution amount of 31,000, which totals out to the 62. And then what we can do is call Fidelity and say, hey, what we want to do is immediately convert this to Roth. And so what that does is essentially takes taxes that you would pay on the growth, and IRS code says you can convert those to a Roth immediately. And so making the account growth tax-free, and then any qualified withdrawal can also be accessed tax-free, which is such a key component of this option, and I'm so glad that it's now introduced in the 401k. I did put in here though some considerations to keep in mind, like current tax bracket, whether you've already been contributing after tax plays a key role also, because we might have earnings on that, and so depending on what we convert, those earnings might be subject to taxation at that time. So this is something that when we're building out a plan, we'll definitely talk about and keep in mind moving forward. All right, so in summary, everything that we've talked about so far is basically the following. Ways to contribute: pre-tax, Roth, and after-tax. When you log into Fidelity, they give you options on what you're currently doing, and you can just plug in percentages that make sense there. If you need advice on that, that's obviously something that we talk about with clients. Second thing we talked about was, what does GM match? I outlined where to find that, and it's also included on this PDF if you'd like me to send that to you. Third thing we talked about, contribution limits. 2019 limits are 19,000 if you're under 50, and 25,000 if you're 50 and above. And then for total combined limits, that is 56 total if you're under 50, and then 50 and above is actually 62,000. And then the final thing that I touched base on was the basic example of the person that was 55 years old that was able to contribute a total of 25,000 that they could defer plus GM's match. Then they additionally contributed $31,000 to the after-tax bucket, which then we talked to Fidelity and said, hey, let's immediately convert this to Roth, making that bucket basically a supercharged Roth IRA, and something that is one of the most tax advantageous vehicles on the face of the planet. If you have any questions, feel free to send them my way. Email is doug@lifepointplanning.com. Again, I'm the founder of LifePoint Planning, which is a fee-only firm specializing in working with GM employees. Thanks.